Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
That's what we're going to do now, inform you on the Q1 earnings season. It's coming into the home stretch. And our research director, Shiraz Mian, is here to help fill us in on how it is shaping up with not too much more time to go. It's been a while since you and I talked about it. But heading into the first quarter reporting season, investors were bracing for, if you recall, the first earnings decline for S&P 500 firms in more than 2 years. Everybody was all beside themselves. They thought that things were going to be dicey due to this downturn. But as it turns out, the results turned out to be a little bit better than expected, right? And that even follows some notable cuts that estimates suffered over the last 4 months, right?
That's correct. Yeah. So if we think back to the end of 2018, you would recall that Q4 was unusually volatile, and there was this big fear of a recession coming up, and it was in that backdrop that estimates for the first quarter of 2019 were sharply cut, and we knew that growth would be problematic in Q1 and also in Q2, but the fear in the market was that we are perhaps at the beginning stages of some really nasty cuts to earnings expectations. Now, as we say, growth is problematic, but those nasty cuts never arrived. So we had unusually heavy cuts in the run-up to the Q1 earnings release. Estimates for Q2 have come down a little bit, but nowhere near the massive cuts we saw for Q1. So that's the better than expected part of the season. Yeah.
Yeah. But was there a lot of margin pressure though this time?
Oh yes, and we knew that ahead of time too. The part of the margin pressure in Q1 and also in the remainder of 2019 is just pure arithmetic. 2018 got this huge one-time boost from the tax cut legislation, which is now part of the base. So anything you compare relative to 2018 is not as favorable. But on top of that, you have cyclical factors. So you have input expenses for a number of these companies, a big chunk of which is because of the trade friction and the tariffs. Payroll expenses are going up, transportation expenses are going up. All of that are weighing on margins as well. So yes, margins have been squeezed unusually heavily in Q1.
All right, so at this point, what are the current total earnings, the revenue, the sales growth numbers?
So I have this slide, and as folks can see, 90% of the results, 450 of the 500 S&P 500 companies have reported results as of today. Total earnings are up 0.6%. Total revenues are up 5%. 77.1% are beating EPS estimates, and 59% are beating revenue estimates. And the comparison charts that we have here, the left-hand one shows the growth, the earnings and revenue growth for Q1, and compares that to what we had seen from the same group of companies in the past. The right-hand side chart shows the proportion of these companies beating estimates, beating EPS and revenue estimates, and compares that to history. So growth, as we mentioned earlier, has been challenged. Let's talk a little bit in more detail about these surprises. And this slide shows the proportion of these 450 companies that have beaten both EPS and revenue estimates. So we're calling this a blended beat percentage. So 51.3% of these companies are beating both EPS and revenues.
Okay.
This is the second lowest beat percentage for this blended beat percentage since the end of the last quarter of 2016. So even though estimates had come down quite a bit, apparently they were not low enough for companies to easily jump through them.
So growth is a real challenge. Is it going to continue to be going forward?
Yes, growth will be problematic throughout 2018, even though current expectations put the second half to be modestly better than the first half.
You mean throughout 2019?
2019, sorry.
Right.
Yeah, so growth is effectively flat-lined in Q1, the earnings season that we are going through.
Yep.
It's modestly negative in Q2, and then it's at least expected to start ticking up in the second half in Q3 and Q4 particularly, and it's expected to really pick up in Q1 2020.
Okay. Sector surprises in the first quarter.
I would say on the positive side, in terms of growth, finance surprised to the positive. A lot of the challenges for the banks, brokers, money managers, insurers were well telegraphed ahead of time, and actual results turned out to be better. Not in a huge way, but still better. On the negative side, I would say among the major sector, technology stands out for its weakness, both in terms of bottom line weakness as well as margins. The outlook for a number of those companies has been on the weak side as well.
Yeah, Apple put a big drag on the tech sector, right?
Absolutely. Yeah, Apple, just one company, but it has an outsized influence. In fact, Apple brings in about 16% of the tech sector's total earnings. So the tough comparisons for Apple has been a big drag. And then the semiconductor companies as well, the NVIDIA, the Micron, Applied Material, Intel. There's a tough comparison cycle for the semiconductors and a lot of high hopes for that space arising on what happens in the second half. So it's Apple and the semis which are a source of the enduring pain for tech.
We're talking here on the week of May the 13th, the week that the retailers report.
That's right.
Their earnings. You see some issues with a couple of department stores in that group.
Yes, so Macy's is coming out with results this week. Walmart, by the way, is reporting results as well. And the department stores have been particularly hit hard in terms of stock market performance. Macy's, in particular, has been the laggard, even relative to the weak performance for its space. And the issues in the space have been well known for a while. It's the declining foot traffic in the store. It's the steady migration of sales to the digital medium, and Macy's and other department stores' inability to really have a compelling product. Now, a number of these guys have been doing a lot better than before in terms of their digital offering, but it still appears that it's a losing battle for a number of these guys. The discussion and the topic typically comes around to their lucrative real estate holdings and things like that. And whenever you hear about things like that, it's never positive for the core business. I would add that the heating up of the trade dispute, where apparel and some of the other department store items are on the list, is a further negative for these guys.
Yeah, it's going to add to the cost of bringing those goods in.
Absolutely.
Right.
So margins have been tough all across, particularly in this space. When they spend money on their digital offering, that's a hit to margins. And now, if they don't pass on the expense of the tariff to consumers, they have to eat that, and they eat that by a hit to their margins.
All right, so bottom line is you see softness for another quarter, but then things picking up in the second half of the year.
And that's what expectations, current consensus expectations show. I have a chart that I want to share with folks here, which gives the big picture view of the overall corporate earnings, and you could see the ones that we have spotlighted here is the Q1 earnings season, and you could see over here it's still modestly in the negative earnings growth. Revenue is expected to be up 5.1%, and then in the second quarter, earnings are expected to be down 1.5%, and then in Q3, it's just barely in positive territory, but still positive. In Q4, obviously, is in the mid-single digits. So that's what current consensus expectations show. The fear, as we discussed earlier, was that all of these expectations would come down in a major way. That did not happen. If this ongoing trade issue escalates, and that has a bearing on market sentiment and growth expectations for the broader U.S. and the global economy, then those estimates may be at risk of coming down.
All right. Well, thanks for that. Don't forget, there's always Shiraz's written commentary. You can find that on Zacks.com, our website. Link to it right off the homepage. It's near the bottom of the homepage. Earnings previews on Mondays and the regular earnings outlook trends summary generally Thursdays. With Shiraz, I'm Terry Ruffalo.